What's up, guys? So, if you are looking to broker private money and commercial mortgage loans and be a CRE loan advisor, you're gonna need the right lender relationships. So, what we've done is we created a tool. It's called our lender database community, and in that community, we host weekly lender Q&As with brand new lenders and some of our staple lenders. Today, you're going to hear from one of our nationwide staple lenders who we place loans with on a consistent basis. His name is Sam Duda. He's with RCN Capital. And with no further ado, here's Sam. Sam, why don't you just tell us a little bit about yourself, man? How you got into this side of the business, wholesale private money business, doing fix and flips, DSCR loans, stuff like that. And then we'll get into the guidelines, kind of what product you sell nowadays.
Yeah, definitely. No, appreciate the intro and thanks for having me on. Glad to be here and hope I can enlighten some people on, our programs and doing some more investment loans, which I just think is the right space to be in right now. There's a lot of business being done and a lot of clientele out there and a lot of business to win. So, love the industry. But yeah, a little background into myself. So, I started out in this business. I was in underwriting for a couple years on the multifamily side. So I used to underwrite Fannie Mae, Freddie Mac, small balance multifamily loans, and I did that for a couple years. And really kind of got my foot wet in real estate, and then had gained a lot of knowledge there, and was getting kind of tired of underwriting loans. Just kind of same thing every day, and wanted to get into the sales world, and stumbled upon RCN Capital about 4 years ago now, in the summer of when COVID hit, and so that's how I started at RCN Capital, and since then I did really well, and I'm actually managing our sales office now in Charlotte, North Carolina. I've been doing it for about 4 years now, and just love the industry, love the space, and I just think there's a lot more to come in this business. We've seen a lot of changes with, as everyone has with the interest rates and everything, and certain things have been tightening up as the space gets more busy, but it's been a great ride, and I'm looking forward to potentially doing some business with you all on the call today.
Right on, right on. Well, that's good experience, doing some underwriting on the multifamily side. A lot of us need a little bit of help with that. Whenever I get a deal on the multifamily side, people always forget to give me what the net operating income is.
Yep.
And it's like, dude, net operating income, that's the same thing as your, as a DTI kind of setup for your personal on a house. It's like, I got to know what your net operating income is. So yeah, it's good to hear you have some of that multifamily experience. I know RCN only goes up to what, like 9 units? Is that right?
Yeah, that's right. 9 units. That's particularly for our 30-year DSCR rental loan. On the bridge side, we have capacity to, lend on properties with more units than that. But the space for capital on the 30-year DSCR side, it's a little bit harder to get those deals funded, and we do cap out at 9 units currently on the
Right.
rental loans. Yep.
Right, right. And everybody knows I do represent Velocity Money. So whoever's part of our program, Velocity, unlimited amount of units. So you guys know that RCN killer product up to 9 units. They have that DSCR program. Interest rates are always going to be better with RCN because they're looking at that debt service. But if you have more than 9 units, you can always send them over to my side over at Velocity. All right, dude, that's fantastic. Well, since we're talking about multifamily, why don't we talk about your guidelines there? Let's say someone does get a 5+ unit asset. What are you looking at to underwrite? And let's talk about terms and all that, and what's the benefit of going with an RCN multifamily versus some of these other guys, including myself.
Yeah, definitely, definitely. Yeah, so really any scenario, but definitely multifamily it applies as well, right? A few things we're looking at on every deal, right? One is who's our borrower, right? How are they credit wise, and what's their experience level like, right? We generally for multifamily we enjoy seeing borrowers that have had experience, whether with other multifamily properties or they own a portfolio of single families, duplexes, triplexes, right? To show that, they have some experience in the industry, right? So, there's always the borrower component of, how, what kind of strengths do they bring to the deal? Do we feel comfortable that, they're going to be able to manage this property, pay back their loan, right? So, when it comes from looking at the borrower, right? Again, it's credit, experience, and then, obviously, do they have the liquidity, to do the deal, right? So, from a borrower perspective, that's what we're looking at. From a deal's perspective, right? Again, we have that 9-unit cap. But for like a DSCR loan, let's say, we want to make sure that the property is going to cash flow to, service the debt based on the loan amount that we're giving, to the borrower. So, you know, we're looking for the property to be stabilized. We want it to cover a 1.20 DSCR ratio. Um,
On multifamily?
yep, on multifamily.
How about occupancy? What does the occupancy need to look like on the multifamily side?
Generally 80% occupied.
Okay, 80%. Right
Yeah.
on. About 1.2 debt service. Fantastic. And that's based on NOI, everybody, not your gross rent. So make sure to work that multiple out.
Yep. Yep.
And one of those tricky things is people will your borrowers will send you a multifamily deal, and they're gonna send you a multifamily deal, and they're gonna tell you what the debt service is, and they're going to make it look like a really nice deal. But you always have to ask the borrower, hey, thanks for giving me this 1.6 debt service, but what interest rate is that based on? Because a lot of these multifamily deals they'll present to you, it's like, oh, we debt service at 1.6 based on a 4.5% interest rate or 5% interest rate, right? So you always got to
Right.
clarify.
Right. And to that point too, right? It's always upfront on these types of deals, like get the property's rent roll, get the borrower's pro forma, which for those aren't familiar with the pro forma, right? That's going to be the client's expectations of the income and the property expenses, right? And sometimes the borrower is not always solving for all their expenses with the property. Maybe they self-manage, right? Maybe they're not budgeting for repairs and maintenance every year, right? But from a lender's perspective, these are things that we're going to underwrite the loan to, right? Even if it's self-managed, because we have to assume, well, if something goes south on the loan, right, we would need a property management company to come in there and manage the property. So, little expenses like that we need to look at on the front end to make sure that the property is going to in fact cash flow. And a lot of that will, it's going to be based on what an appraiser has for, market expenses, but something to consider when we're looking at these deals, because they're going to be, it's going to be a more in-depth underwrite if you haven't gone into the multifamily space yet. If you're just used to 1 to 4 family, right? Because on a 1 to 4 family, as far as that DSCR is calculated, right, it's your rent over your principal, interest, taxes, and insurance, right? We're not factoring in for operating expenses. Where these multifamily underwrites are different. We're actually gonna we're gonna underwrite to their expenses, right? Property management, repairs and maintenance, reserves, admin fees, right? So those are things we need to consider on these types of properties.
Right. No, absolutely. Absolutely. Are you still at 0.8 debt service? I want to make sure this sheet is accurate still on the 1 to 4s.
Oh man, I wish. I wish. No, we our DSCR calculation is higher than that now for 1 to 4 family. And it's going to be a little bit dependent on, what the borrower's FICO score is. So, 660 is our minimum FICO score. And so, our DSCR calculation on the 1 to 4 family, it's going to be 1.05 for borrowers with 720 plus FICO. It is a 1.1 if their FICO is between 700 and 719. And then if they're 699 to 680, it's a 1.15 debt service coverage ratio.
Got it. Got it. Yeah, that's so marginal. So marginal. How do you determine that when a property's vacant?
We're going to look at the market rent that comes
Okay.
back on the appraisal.
Right, right, absolutely. Okay, cool, cool. I'm gonna just open it up for questions. Since I have Carlos on the line here. Carlos, you're the only one with us. Do you want to ask any questions? I'm just gonna leave it open just for a second for you, brother.
Not right now. I have I'm already with RCN, so yeah,
Yep.
I'm already dealing with a couple of their people.
Yeah, yeah, you know the deal, right? Who do you
Yeah,
work
yeah,
with
yeah.
up there?
I work with a guy named Bailey
Bailey,
Jenkins.
Bailey Jenkins. He's actually under my management. How do you like working with Bailey?
I love Bailey. Bailey is a nice guy. He's very knowledgeable. He knows his stuff. He's a very intelligent guy with the business.
He is. He's one of my best. I'm glad you work with him. Hope he's giving you great service and
Yeah, he's giving me fantastic service.
good. Yeah, wouldn't
No,
expect
no,
anything less out of him.
nope, nope. Needs better work. Better needs to answer the phone sooner. Sam needs to answer the emails quicker. Right, right, Carlos. Come on, we got to give him a little bit of critique for Sam here since he's management.
Well,
No,
you
I'm
wouldn't
just
believe
kidding.
it. I kid you not, and this is true, and I'm not just saying it because I'm on the line. But when I
Yeah,
call Bailey, within 5 minutes, he'll answer, or he'll turn around and send me an email telling me he give me 5 or 10 minutes extra, and Carlos, I'll be right with you.
that's
Well,
good.
well, that's good, Carl. That's how I taught him. So good to hear that it's working out in practice.
Yeah. Yeah, so it sounds like he works a lot like me, Carlos. Sounds like he works a lot like me and Sam over here, right?
Yeah, yeah.
Oh, no, that's good, man. That's great. Okay, fantastic. Well, everything's up to date here, right? On our sheet here that we got for you, you're still nationwide. These LTVs are still pretty accurate, or do I need to change some stuff based on what you're seeing?
Yeah, let's take a quick look at this. And is this just for like the DSCR rental loans? Because it
Yeah,
okay,
yeah.
gotcha. So a couple things here. Loan amount, we can go down to a 55K loan amount.
All right, that's good to
Now
know.
with that said, we need the property to be worth at least 100K as is.
Okay.
But loan amount, yeah, 55K is our minimum. Term 30-year fix, that looks great. Origination points, we don't have to charge any origination points on DSCR rental loans. Every scenario is a little bit different, right? But we can go down to par pricing, 0. All the way up to 4 based on how the borrower wants to, buy down the loan.
Yeah, we'll do 0 points at par.
Yep.
Can
Moving
you do
on,
yield spread?
we can do yield spread, so up to 1.5 on yield spread.
Great.
Would you all eventually go more than 9 units?
It's a question we get asked a lot. In the near term, I wouldn't expect anything. It's something we've been pushing for. It's just it gets hard to fund after 10 units. There's not a ton of note buyers that we work with that kind of want that paper. And if we were able to do anything right, it's at a super low LTV and not what the borrower wants necessarily. So we're really just operating in the 5 to 9 units right now.
They don't
Got it.
need to go anywhere, Carlos. RCN is so comfortable. They're so comfy. It ain't moving. Don't expect it for sure. Too
Hey,
risky.
Okay.
hey, but the 5 to 9, we will be your stop for that though. We do that really well.
Yes, sir. Yes, sir. Absolutely. How about everything else? Do you even mess with mixed use? I don't even know.
I don't like it very much, but we can on bridge loans. No DSCR for mixed
Got
use.
Got it. All right. Well, let me move this screen over and I'll try to pull over. So, Sam, I run a training program, and if you're just starting to watch this, when you take part in the training program, you get to pop into these lender Q&A sessions, which we do every single week with our lenders that are in our lender buckets. Each one of these buckets, from the 1 to 4 bridge, ground up, fix and flip, 1 to 4 multifamily perm, ground up focus lenders, commercial bridge lenders, we have your whole turnkey brokerage set up, and we use this list and these guidelines, which we update every single week, as you can see with our lenders. So that's why I'm going to pull the screen over. I don't want to give away all of our lenders, but I will pull up RCN here on the fix and flip, and you can give me some critiques there as well. So give me just 1 second. And Sam, if you know anybody that would benefit from this program, just let me know. I mean, a lot of account executives on our end of the business, like when I got into doing these loans, there's no training, there's no support. Nobody wants to help anybody. It's freaking hush hush. Broker chain business. It's a very isolating business, and it's a very backstabbing business. So that's why I started doing YouTube videos to teach people how to actually do private money mortgage notes, how to broker these loans. Because I was ended up spending so much time with the residential guys, convincing them to start doing private money and telling them all the benefits. Like, man, I just started doing YouTube videos, so I don't have to explain it to them. And then eventually people are like, hey, do you have something more formal? Can I get more education? And that's why I developed the New Finance Commercial Mortgage Accelerator, where basically, you know, I give them all the foundational training so they know how to do this and they have confidence building a brokerage out of it. So if you,
definitely, that's awesome. And we provide some education stuff to get you familiar with RCN Capital as well. We have our own, Amplify training course that'll get you familiar with, all of our loan programs. So to supplement what John's doing here with everybody, we do have a self-paced course that, if you want to start working with RCN Capital, this kind of course will get you finely tuned with all the programs that we offer. So I think as a supplement to, what you're doing here, John, I put a plug in for that and say it'd be a good resource for everybody as well.
Sure. Yep, absolutely. You're not the only lender. Lenders should have some education on their product because we want you to sell our products at the end of the day. So, that's what's so good about this business. You don't have to know everything about everybody's product. They'll teach you. That's what you're here to do. You're here to get me to know your deal. So I don't sell Velocity product. I sell Sam Duda product, right? So it makes sense. It makes sense, brother. So I appreciate that. Our builder lender, our ground up construction lender has like a literal certification course on how to do theirs. So it's pretty amazing. You get double education.
It's great. Listen, we want to give brokers the tools to where they feel in control of the deal, right? I don't necessarily want you to feel like, hey, I need Sam to sign off on this, right? Like we want to give you the tools to be able to say, hey, this is a good fit for RCN Capital. I priced it out. I know their guidelines. Like, there's a lot of empowerment in that, and just being able to do that on your own, right? It takes some time, but as you work with us, use some of our training courses, you'll certainly get there, right? We provide those tools to brokers because we want them to scale, right? And if it's a lot easier if you know the answer, right, than having to reach out every time and ask your loan officer for the answer. So we want to empower brokers like that.
Absolutely. Yep. RCN's a big player. They've been in it for a long time, so it makes sense that they have that. Okay, so Mr. Sam, this is your fix and flip sheet breakdown. I think before we had another person filling these out. So are we up to date here? And also, I want you to kind of give me a better reason to send you a fix and flip or ground up deal here. And I know your guys' ground up is not very good in comparison to a lot of others, but we can get into that. Can you give me a better reason here to send you fix and flip loans?
Yeah, I mean, we've been really trying to expand our fix and flip product and make it as competitive as anyone else in the space, right? As far as why send it RCN Capital is we've worked on a lot of things that we've heard feedback on from brokers. Like one is speed, right? For a while there we were requiring full appraisals, and now we have some options to where we can get what it is essentially a BPO, so we can fund off a BPO that we can get back in 3 days, right? So now those hard 2-week closing deadlines we can meet, where maybe in the past that would have been more of a struggle for us because
what are the conditions on a BPO?
Yeah, so what we're looking for there are purchase deals, right? Rehab amounts under 150K, and borrowers that have at least 3 fix and flips within the last 36 months. So it is kind of tailored to more of the experienced borrowers. But we carved out that product to really meet their needs on being able to close quickly.
Got it. Yep. No, that makes sense. Yep. You guys are large. It's hard for us nationwide lenders to compete against the local private money, hard money guys, right? Like that's our big struggle. And, we can't BS and say we can fund in 7 days, 10 days, like those other guys. If you're going to fund in 10 days with big guys like us, you need to have been through it at least once or twice, right?
Right.
Like you got to know the RCN system, right? Otherwise, it's going to be kind of slow. So make sure, just full disclosure to you guys, if you haven't used RCN, don't be quoting 10 to 14 days until you've done at least 1 or 2 deals. You should be pushing out maybe a 21, 30-day closing at the beginning. Once you get the rhythm, once you understand the systems, and Sam's going to hold your hand. And Sam, you can, I know you might be biting your tongue right now to say something, but large lenders will advertise. It's hard for us to beat out the small local shop lenders who literally they go to the foreclosure auctions with you. Like they can close without appraisals because they know the markets. We on the other nationwide, we got to do our checks and balances. We have to do our appraisals most of the time, and we are going to move a little bit slower than those other guys. However, the pricing will beat every time with the local hard money lender. And just be careful about quoting these timelines like Sam has here, which is good. 14 days, yes, but you got there's going to be a learning curve. So make room for that.
Yeah, definitely. I definitely agree with what you're saying there, John. And a lot of times, right, like after that second deal with the borrower, right, we have all their documents, right, and it's we're really just getting an appraisal, and it makes it easier to close, right? I mean, you can set up files to where we can meet close timelines, but to John's point, like, yeah, that if it's their first deal they're ever bringing to us and we don't even have their schedule of real estate owned yet, right, we're really trying to push something, and it's going to make for a little bit more of a difficult process. And the biggest competitor, is these private lenders that can fund off of no appraisals, right? And sometimes we're not going to be able to beat out their speed and what they can offer, right? There's a place in the market for them, right? And with a lot of experienced borrowers that I work with, not every deal is going to be the right fit to RCN, but I want to make sure that I'm telling them that, hey, this deal is going to be a good fit for us, right? We do have a little bit more time to get this one closed, and we can execute on it well, right? So there's, when you're going to place a loan, right, you just, you got to know your lenders, like John's saying there, and, just got to make sure it's the right fit.
Yes, sir. Carlos, did you have something to say?
I don't have anything to say. I would recommend anyone that use RCN actually do it 1 or 2 times to really get the process familiar with your particular system, because I've done several deals with them, and I recognize you do need to know their system in order to actually move that loan quite expeditiously. Yeah.
If you're a broker, Sam's talking about the underwriting for your first loan for your, a borrower that they've never worked with. But if you're a broker, brother, there's a learning curve with everybody's system, how they like to see submissions, what is a full submission, what's not. Like there's going to be that learning curve. So just expect that at the beginning, especially if you're starting out. And that's why we have this training set up, guys. So to make sure you're setting proper expectations and not burning your borrowers and burning bridges. Because they're, you're screwing up their closing timelines because you don't know what you're doing, and they'll do their best to train you up. But your first few loans, man, you got to know the system. Very important. Once you get rolling, Okay, let's look at this list, Sam, if you don't mind, brother.
Okay.
And, this is your fix and flip under our fix and flip. Yeah, we got you under the perm, and we have you in our ground up and fix and flip over here. Any adjustments that we need to do here?
Let's take a look. Loan amounts look good. Terms look good. Origination points, we can go all the way down to 0.5. It just depends on the deal size. So RCN just needs to make a minimum of 1,500 in origination on 12-month scenarios. So, if it's a $100,000 loan, right, we'll charge 1.5. But if it's, a $500,000 loan, we can do 0.5 point. There's a thing for yield spread there. I would say no for that unless you're a correspondent lender with us. Then you can start to charge yield spread on 12-month loans.
Right. No, that makes sense. You can't do yield spread on yeah, nobody does yield spread on those. Except for Kiavi does yield spread on those, but you know, if borrower pays off early, you can't, you know, you don't get paid
Sure.
as much. So honestly, I just stay away from the yield spread over there with those guys.
Yep.
Okay.
Property types look good. Purchase, refi, rehab loan, bridge, no rehab. Yep. Ground up, recourse, entity required. Yep. All those things look good. Appraisal required. Yes. Do we take reassignments? We can. We just have to get them assigned over to RCN Capital.
Yes, y'all definitely take that.
Yeah. See, Carlos knows.
I know that because I just did one with you all like that.
A good deal.
Reassign.
By the other lender, right?
Yes.
Right.
Yeah, I know how that works. We do the same thing every once in a while.
Speed to close, you know, I think as far as someone just looking at a sheet, I think that's fine. You know, obviously once they've done some business with us, right, we can shorten up that time frame. But if someone's just looking at this sheet, you know, I think that looks good.
Yeah, just setting proper expectations, man. We do our
Sure.
best.
Yep. LTVs, we can go up to 92.5% on purchase. But you know, that's going to be for a 10+ borrower with some experience in the market.
Right,
But
right.
we can get up there. 100% rehab, 75% of ARV.
Good, good. LTC, 80.
I think that's still at 75. Let me double check.
Kind of weird. LTC is normally higher than ARV.
No, sorry, it is 92.5% on that
Yeah,
as
there
well.
you go. Yeah, it's normally like
Apologies.
90.
Yeah.
I'm at 85 right now over at Velocity. So
Okay. Yeah.
you said 92.
92.5. Yep.
There you go. This whole B paper borrower thing, man. It's just kind of philosophical, or I mean, you want a quality borrower. We're not doing anybody, right? So we have some people where it's like we do anybody. And it's like F paper, like we don't care who they are. You guys want some experience. You know, I would say they're not perfect borrowers. They're kind of, they are on the upper end, in my opinion. But you can fill me in. B, A, B, C. What do you think?
Yeah, probably B. Borrowers generally need to have strength somewhere, right? Like we can lend to borrowers with no experience, but you know, well, do they have a good credit score? Is their liquidity in a good spot? Do they have a plan to complete the rehab, right? Like we'll assess those things. But do they need experience? No, not necessarily.
Right. RCN is a reserve company. They want to see reserves. Very important. Okay, guys. So not low liquid borrowers are not good for RCN. Must have liquid. And can you explain what they can use for their liquid reserves when they're doing deals with you on whether it's a fix and flip or a 1 to 4? I mean, or perm.
Yeah, definitely. So liquidity. So when it comes to liquidity, you know, easiest thing is bank statements, right? Whether that be a personal bank statement or a business bank statement. It doesn't need to be our entity's bank statement. Just if it's another entity that the borrower owns, we can source that as liquidity. We just need like an operating agreement to, you know, source that, you know, that is the entity under their ownership. We can also use retirement funds, stock accounts, money market accounts, right? We can use all that at 50%.
Okay, got it. How's everything else looking? FICO, max
FICO,
ULV.
you can switch that to 660.
Okay.
Minimum experience, we can put that at 0. There's going to be certain markets where there's like 3 markets where we need experience, but in general, it's 0.
Okay, that's fantastic. Wonderful. All right. Thank you for updating the sheet for me live here so everybody can see how this works. Thank you for breaking down RCN. I think you did a great job. Sam, I'm glad we're hooked up with you, man. Anything else that people should know to sell the RCN product if they're not already selling it? What are they missing out on here?
Yeah, listen, we offer you know, all the products that a real estate investor would need, right? So from fix and flip, 30-year rental loans, ground up construction loans, right? We do it all, right? We want to be that one-stop shop for these investors, right? And you know, when you're working with investors, it's a lot easier if you're kind of sending them to the same lender every time who has a relationship with them, right? Who can make exceptions when you need them, right? And but you have to build the relationship with the lender. And you know, when we start to have you know, history with a particular borrower, right, we can start to get looser on some of our guidelines, right? But we need to build that, right? But you know, at RCN, we're going to give you the tools to be a great broker, right? You're going to, you know, be working with an account rep like myself, who has a team that they work with, a loan processor, a loan closer, a person who helps out with leads, right? So you're going to have someone that you can always call who's going to give you an answer, who's going to work deals with you, right? We have training programs set up for you. We have software, our bridge loan network software, right? Where you're going to be able to price out your own deals, right? Where you don't need to wait on your loan officer to send you over terms, right? We're going to give you the tools to be able to do that. You know, we have in that BLN software, you're also going to be able to check on your loan, right? What stage is it in? Is the appraisal back? Are we in underwriting yet? We want to give that visibility to brokers, so you know, you guys aren't left in the dark about what's going on. So you know, we give you guys the service that, you know, you all need to be successful and grow. And we give you guys the technology you need to keep growing and manage your extensive pipelines.
Right on, right on. Wonderful, wonderful. Well said. A lot of private money lenders still working off of emails to send stuff back and forth to get you approvals, and they don't support you nearly as much as the big players like RCN. So, Sam, dude, I really appreciate it. Thank you so much for hopping on. And this is going to go out to all the users. So, thank you so much for watching, guys.
Great. Thanks, John. Appreciate you having me on. If any questions, feel free to give me a call. John, feel free to share my information there. Be happy to work with anybody. And thanks again.
Right on, brother. Thank you.
All
Take care,
right.
guys.